Managerial accounting is a branch of accounting which provides information to managers to use within the organization. It focuses on three functions, and these are those three functions in very much a nutshell. Number one, it allocates costs between cost of the goods sold and inventories for internal and external profit reporting. Number two, it provides relevant information to help managers to make better decisions. Number three is to provide information for planning, control, and performance measurement, as well as continuous improvement. So let's take a look at the differences between financial and managerial accounting. And the reason why we're doing it specifically is because by this point, the students must have had passed the course on financial accounting, and so they know what financial accounting is. And so to provide a better insight into managerial accounting, we'll look into the differences. Now, first of all, in terms of the objectivity, or rather the objective of the financial managerial accounting, financial accounting focuses on measuring the value. So there is value, we just measure it and we report it. With managerial accounting, we first create it. So we need to first create the cost of the product, we need to first establish it, we estimate it, and we create that value. Next, the users. Financial accounting focuses on reporting to external parties. And now it doesn't mean that the internal users are not using it, they are using it as well, but the focus is to present it to external users. Specifically, let me just add it right here, that would be investors as well as the creditors of the company. And managerial accounting focuses only, and let me again add it here, only internal users. Next, financial accounting information focuses on the past. So by the time when we look at the financial statements, we're seeing the past of this company. With managerial accounting, we're focusing on the future. We want to estimate our sales. We want to forecast for the future. We want to know what might or might not happen in the future based on the past activities. Financial accounting information focuses, and this is important, on the verifiability. So we want to know that numbers that we're seeing are accurate, we can verify it, and as well as they must be precise. But managerial accounting focuses on relevance and timeliness. So when we're making certain estimations for the future, we're making them based on our estimation and based on the data that we have from the past. But again, nonetheless, that's all going to be an estimation. And therefore, we cannot really talk about precision like we did in financial accounting. So we are looking into relevance. The information must be relevant to a specific product, to a specific division, as well as the timeliness. So we have to get information on a timely manner and include it to prepare certain managerial accounting reports. Next, the subject of these accounting fields is going to be financial accounting. We're focusing on a company-wide report. So from the past course, you've seen the financial statements. They don't show us, for example, a balance sheet for just one product. We're looking at the whole company with multiple products in it, with the sales that show us all of the product that have been sold. So the revenue from all of the product that has been sold. So it's a company-wide report. But managerial accounting focuses on segmented reports. So again, those segments, and we will learn them in the future as well, can be divisions, departments, products, etc. Rules, financial accounting must abide by the either local regulations or international ones such as IFRS and GAAP, but managerial accounting doesn't have to follow any rules. There are no pre-designed or prescribed formats to follow. And finally, the requirement: financial reporting is mandatory for external reporting, but managerial accounting reports are not mandatory for any reports. So considering that managerial accounting reports are only for internal purposes, some companies might choose not to prepare them. But of course, to make better decisions, you would rather prepare one. So there's that. These are the financial and managerial accounting sort of differences. I hope it was useful.